Welcome back. Well, quiet for the equity markets. A good time then to get in a reaction on the WPI data for the month of December, which is coming at around 0.8%. We have Kanika Pasricha, who is the Chief Economic Advisor at Union Bank of India, joining in to discuss this. Kanika, hi. Thanks very much for taking the time out. Your quick view, 0.8% for the month of December. What would that reading mean to you from a policy standpoint?
So see, frankly speaking, Ekta, we were at 0.45 and even market was actually below us. So the number is I would say, an unfavorable surprise. After a positive surprise we've got from the CPI print. 2 points there. We think that while food inflation from deflation zone has switched to a flat reading, that's partly a contributor because at this time of the year, while veggies show a month-on-month decline, they've started to rise due to unseasonal rains and some supply disruptions. That's fine. Second, which we think is playing a significant role, is the underlying positive momentum seen in global metal prices. That is leading to higher core WPI inflation and keeping it up. Now, on the policy side, frankly speaking, we were looking at a terminal repo rate cut of 25 basis points, either Feb or April. But not just WPI, we think generally as well, with the rising uncertainty globally, there's a case for that rate cut call. The bias is shifting towards April rather than Feb from monetary policy perspective. Anyways, it's the last rate cut in the cycle in our view, and the timing usually is difficult to call. Thanks.
What is the outlook now generally? Because we've been going through so much globally as well, Kanika. We are talking about higher crude prices. We are talking about maybe some commodity price rise further from these levels. Considering all of it, what kind of levels do you foresee from here on?
In terms of repo rate or WPI?
Both of them.
Check. Okay. See, frankly speaking, what is important is even if crude, so 3 points to note here. First point, when you're talking about crude price-related uncertainty because of global geopolitics, even at 63, 64, sub $65 per barrel Indian crude basket price is still comfortable. I would say very comfortable for India. And there is a lot of space and buffers both with the government, even if not so much with the government, but with the oil marketing companies to safeguard the retail customers there. That's one. Second, what we think is that broadly from first inflation perspective, yes, we have bottomed out already in the month of October, November, post the GST rate cuts, the blip that had come. Now it's not likely to sustain. There is a turnaround in inflation. But broadly, when we look at inflation dynamics, most important CPI, they are likely to stay well behaved. We see inflation panning out in line with MPC's projections, revised downward in the December meeting. That's second. Third is on the repo rate. We think while there is a lot of uncertainty, yes, it's a time, you're absolutely right. It's a time when the policymakers globally and even in India are likely to wait and watch. Like the probability of a Fed rate cut is also less than 10% in the January policy. Similarly, for February, the bias for easing from the rate side from our MPC is also limited. But what is most important is the easing from liquidity perspective, which we think is likely to continue. So the outlook remains favorable monetary policy, maybe not so much from the rate side, but more from the liquidity perspective, and that's on watch. Thanks.
Okay. All right, Kanika. Thanks very much for bringing us that quick perspective on the WPI data for the month of December. Remember that the RBI meets just a few days after the budget on Feb 4th to Feb 6th. That is the dates for the RBI meeting. We'll take a short break.